I'm Stacy McBain with Swope Investment Properties. Thank you for being here, AVID Investors. Here's our official update that actually starts with another unofficial update. Tony's blog is at boiseinvestmentproperties.net. And he did an interesting data delve where he assessed what was going on with both year-end data, month-to-month data, and the overall market. And these are his bulleted summary points. We're being told, if you read the news, you might have seen or heard that single-family home prices have been come down only 5.5%. Did anyone read that article? Well, that's when you compare December to December, and that's not a drastic shift. That's not really what we've experienced as we see and drive by all these for sale signs. The reason for that, and the reason it seems worse, is because if you compare to the peak of the market that we had last spring, that's a difference is actually more like 15%. So that's a 15% change from when things were just going up and up and up and up and up, not just 5. Inventory is in effect 150% higher than it was in 2021. Time on market is up. And so with it taking nearly 2 months to sell a home now, we're all shocked and inventory is taking time to build up. But just like the story we hear with rates, 2 months on market is not drastic. It's still actually, it's closer to a balanced market, but it's just drastic compared to the frenzy that we experienced for a while there in response to the pandemic. Multifamily doesn't seem like it's been hit as hard. However, duplexes and triplexes were hit the hardest. Notice I say buyers there. I have a buyer's note on the slide. Buyers, if you've been thinking about a duplex, if mom's moving to town, if you have a kid moving to going to whatever, there's a reason to buy a duplex. This is not a bad time to watch that market. It's actually taken a little bit of a hit. And sellers, you've already seemed to have gotten this memo overall, and so they're not necessarily flooding the market with their inventory. As you saw here, some folks are withholding their inventory and waiting. They like that strong seller's market better. Apartments may be even better deal yet, but there's just not that many of them on the market, and fourplexes are doing well. So check this interesting stuff out. We've got inventory. Of course, the laws of supply and demand. Inventory affects supply and price. And here you see how we have had the median sales price, which is a green line on a chart that is going up, 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 up. And then down at the very end, here's your inventory. So this is when we ran out of homes. These were those 2 springs where we ran out of homes. All of a sudden, inventory has spiked here, but you see the prices starting to come down. So the inventory has affected supply and price, while the mortgage rates are a big story affecting demand. And so as those mortgage rates have gone up and up and up, we have that blue line that's just spiking there. And with it coming down a little bit, you know, that is potentially could induce some buyers, but those higher rates have affected those bars, which are the quantity of homes sold. So we're talking a little bit about the quantity of homes sold. And in these numbers, these sales numbers, this is actually the quantity of homes sold in various years, 2018, 2019 through 2022. And you can see in 2022, almost 21% fewer homes sold. So we had this year that completely spiked in terms of prices, and that first half of the year is really carrying us the last half of the year, which in terms of some of the averages and changes in median sales, etc. So year over year change, we're up 10% supposedly in 2021 versus 2022, even though at this juncture we've seen things come down in this last half. So this is what the high looked like in spring of 2022, where we had our highest data both in Ada and in Canyon. And you can see again at the bottom that it was starting to take a dip, but our high was around 600,000 for a median sales price in 2022. Here we are in December at 515,000. So yes, only a 5.5 decrease year over year from last December, but a big difference between 600,000. And we have two data points. We have the year end, the average of the year, and then we have what's happening in December. And so the year's average median was 566, but in December we were at 515 in Ada. And in Canyon, our December median price of homes is down below 400,000, sub 4. So that's a -7 change, a 7% decrease year over year. Whereas again, that year average is a little bit different, and that year average median is above 4. And days on market, of course, are up, inventory is up, and number of homes sold is down in both markets. Now back to the duplexes and fourplexes and how those fit into the equation. Residential income inventory has just been down. And so while seasonally speaking, that's normal, it's been a little more so than normal. So sales came up a little because we had a lot of new construction to be built that had a long time ramping up to market. And so some of those sold and hit our sales data. But absorption level is literally 0 because there were no active listings in certain categories. So there's a big story here. Sellers aren't necessarily flooding the market with ongoing listings after having experienced such a seller's market, but the listings that are there are sitting a little bit longer. And they're not being priced as aggressively, because if you wanted to sell, you need to stand out. You can't just sell anything anywhere for any price. Now, the average Ada County fourplex pricing, you can see that those prices are pretty stable. And so we're right around 900,000. And this is Tony Dross data, also on that blog. And cap rates, sometimes when not much sells, one property can really create a major data spike. However, we're at a 6-month average of just over 4.5%. So we're not at 5, but we're not at 4 anymore either. So cap rates have gone up, which is good for buying if you're going to find your money from an inexpensive source, which is tricky unless you're cash, or putting a high down payment, which helps your cash flow. Days on market went up, and price per unit right now is around 230,000 per unit, affected by number of bedrooms, etc. But for your quick value tool, if you just want to know, hey, how much is my fourplex worth? How much is something worth? Just take your monthly rents times 180. And that's roughly where your value is based on a super napkin number. And that's what your property's valued at now. So chances are you've still got some equity in your property, even if the prices have gone up and down a little bit. Usually this is like 3 different slides, but there's so few listings. This is one slide. The top 2 are all of today's active Ada and Canyon County fourplexes, and that is exactly 2 in Canyon County. And the bottom are anything that's above 4 units, 5 plus. And the most striking thing in here was that Colorado multifamily with 16 units. It's built, so there's that. We had some that you were paying about that, getting like some plans and a pat on the back and a chunk of land. So this is actually built. It's older, it's wall unit ACs, but they've rehabbed some of the units. They've put a new roof on it. They've resealed the parking lot. And so it's kind of a vanilla 2-bedroom, 1.5 bath. And you're getting 16 of them. And I imagine a good chunk of those 16 will probably want some new flooring and surfaces as well. But that cap rate was 5-ish at current rents and 6-ish at market rents. So decent numbers. Indicators. Investors like to time the market. We have the luxury to do that. We're not just needing to move. A lot of our business right now is people who are moving and need to change houses. The market indicator that we're seeing right now for those investors who want to time the market is loans. The number of loan applications is up significantly, says Dave Rusk at ICCU. So if we get more buyers, that can affect our supply and demand, that can affect our demand. And it is coming into spring, the selling season, the buying season. So we'll see what happens. But a lot of the pros think that things will really kind of turn around until a little past, maybe Q3 or something like that. So nobody has a crystal ball. But as long as our properties are cash flowing, we're doing fine. So are they going to keep cash flowing? How's the rental market? Sounds like there weren't too many vacancies this winter, which is great, but the rental market did slow and fall. Vacancies went longer. First rate reports that days on market went up. And the NARPM data that surveys everyone said the same thing, as it matched this first rate data. They have a lot of units, but it's nice to check both. Their vacancy rate's still a little better than the NARPM generals, but owners reduced rents to get those things filled. And rents fell back a little before the spring prices. So while rents just kept pushing up, they kind of backed off on that increased gas pedal for a minute. The number of rental applications has doubled. So again, an indicator where everything sort of screeched to a halt for a minute, but there are some indicators giving optimism. Here's your historical vacancies. You can see where they spiked in Q3. We don't have our Q4 data yet, but I think that it'll come back down a little bit in Q1 of this year. And this was, again, the last NARPM data available. And so, so it gives you some rough rents, but I think it's, we're going to need to scrutinize these a little bit more. So, but just for rough ranges, for example, if you're renting a 2-bedroom, three bedroom is in the 2,000 range in both Ada and Canyon, but more so in Ada. Canyon might be a little below, depending on what the specific property is.
Residential?
Yeah, these are the single family residential. I kind of zoomed through this one. Now here's let's see, single family, multifamily. Multifamily 3 bedrooms are also, in the $1,800-$1,900 range, $1,700 to $1,900. So they're close. But for multifamily, we have a lot more 2 bedrooms, and those are in the $1,400-$1,500 range on average. Going to be a lot of variances, especially if you're new or older. So this is the rental market update. Any questions on that? Okay,